Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday, Election Day edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim and TD Ameritrade. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Well, these are the times that try men's souls, as Thomas Paine once said. So we're going to get through the show with hopefully as little political talk as we can help it. We do have some earnings and a few disaster stocks of the day to discuss. Also, a pretty interesting downgrade city of Goldman Sachs. Got three guests for you today. Juan Mendoza at 8:15. He's the founder and CEO of a company called Peep Trade. Then at 8:35, of course, we'll have Nick Shaheen on, and then special guest 9 o'clock. Sean Udall is really fired up, and he wants to come on today and talk about what stocks he's playing in either scenario of tonight's election. So, we got a busy show. Joel, how are we doing on the S&Ps this morning?
Well, considering the huge rally we had yesterday, we're doing okay. We're only down $2.75 here. Call it $3. We got up to 21.30.75 yesterday. 30 and a quarter is the high. That was our 5 and 6 day highs as well. So 21.30, that's your big number on the upside. Pre-market low, 21.21 and a quarter. Man, not much underneath that, but I'm sure a lot of shorts would be happy to see any kind of decline under 21.20. Crude got over $45. Couldn't hold, down 30 cents here, trying to break that major losing streak. Good support at 44. Just under that, gold and silver flat here on election day. Dennis, are you fired up or what?
I'm scared. I'm just scared here, and I don't know why. Like I said yesterday, I'm having deja vu here from Brexit, and we're not saying Trump is getting in, but I think it's going to be a lot closer than this market thinks. Here we are. S&Ps have the ridiculous rally, the Clinton rally there yesterday. Market basically banking all in on Clinton here. And if for whatever reason somehow Trump, squeaks it out, or somehow, it's close enough that it can get contested here, I think the market gets absolutely annihilated tomorrow. But I even wonder, how much more gas? So let's say Clinton does get in. Are we going to blow right out to all-time highs here, Joel? Tell us a little bit about the S&P technicals. What are we challenging up here? And where's the risk-return setup here? Because there is an unknown. I mean, when you're 3-4 points, talking about difference in the polls, I don't know what the margin for error is, but I'd imagine it's in that
right
vicinity
there.
here. So there is some risk here. Joel, tell us what the S&P.
I mean, short term, 21.30, 75. That's your bogey. That was your 5 and 6 day highs. That's your high so far today. So that's my pre-election, post-election number, support or resistance, whatever it turns out to be. On the downside here, I guess you just have to worry if we take out the low of the move. The low of the move on Thursday and Friday here was the double bottom at the 2080 level. So between 2080 and 2030, this thing is just like rolling the dice here. But Dennis, what do you have to worry about? Trump didn't say he was going to build a wall around Canada.
I'm worried about the market more than the Trump situation. I don't know what's going to happen. If Trump gets in, I think it's going to all be interesting all of a sudden. The part of you wants to just see what would happen. I don't know what would happen, but it's just going to be so much uncertainty for the market if he does get in, and that's what I'm scared. I'm scared for my investment portfolio a little bit. Some people were asking me yesterday, are you going to hedge your investment portfolio going in the election? And, normally I would say no, but now I'm starting to think, man, we've had such a nice rally here, this Clinton rally up here. I'm like, maybe I should hedge a little bit just in case, because I think if Clinton gets in, I think we pop. I think we could pop, like maybe even what we did yesterday, maybe 30, S&P handles here. But I think if somehow Trump squeaks it out, like I was saying, I think the Dow could fall 1,000 points tomorrow.
So let's say you did hedge. Let's say you did.
So it's like a 3-to-1 risk, 3-to-1, maybe even 4-to-1 risk return they're offering you on Trump right now by betting on Trump.
Now, well, I'm talking, I mean, how would you hedge, though? I mean, if you go to any kind of these shorter term options, you're going to be paying up a lot of premium.
Yeah,
Would you think it's
good
just
point.
like, buying like the SDS or buying one of these? So, I mean,
You can hedge in a lot of ways. I mean, I'm fully long in my investment portfolio. It's full exposure. I do have quite a bit of cash. I've been sitting with about 25 to 30% cash here for a while, which has been the wrong call, really, because I've been sitting on the 25 to 30% cash for a few years here now, just expecting, the house of cards to eventually start to come back in, which has not happened. So, but, 70% long exposure here still is pretty heavy. It would really suck tomorrow if we went down 1,000 points. I wouldn't be happy in my investment portfolio. So yeah, you could use a number of different things. You could look at the short-term options, but like you said, you're paying up for that. You could just flat out short the SPY if you didn't want to use the SDS or anything like that. And just, and I'm not saying hedge the whole thing. I'm just saying, maybe you want to hedge part of it if you don't want the exposure. But I've been in the market so long. I've never hedged my portfolio in the past. Obviously in the financial crisis, I wish I would have been hedged because the portfolio was really getting hit hard there. But the trading environment was so awesome then that it kind of overcompensated for me anyways. And sometimes I think that as a trader too. I like volatility. And, if volatility does come back in the market, even though my investment portfolio is going to go down, my trading income will probably rise substantially if volatility goes up. So it's kind of a natural hedge in that way. So a lot of thinking here, just brainstorming with you here. But what are you doing, Joel? What are you doing? You just
I'm
think
I'm a lot lower cash than, or much higher cash than you are, but I've been that way since like 2000, so it's nothing to brag about.
because you're old.
I got it, I got it. But to me, my overall opinions of the market are not necessarily swayed by the election. It's still the same thing I've been talking about for several years is, interest rates. And as long as rates are low, which I don't think is going to change that much, with whoever takes over the White House, there you go. That is my driver to, exit the markets or do it. You never completely exit, do a different asset allocation is where interest rates are going. And I think at this point, I think we can safely conclude that the fodder is still there for this bull market with low interest rates.
Yeah.
And until that's it goes interest rates, the top three things that I look at when I'm investing long term are interest rates, interest rates, and interest rates. And
It's a good point.
And am I going to make a big move here off election? Absolutely not. And I was one thing I was thinking about was a Clinton pop if she won, but I don't know if that was yesterday.
That's what I'm saying.
That
It's
was
like
so
the buy
different.
on rumors, sell on. Like, I don't know if the market goes up even. Like, I think it goes up, but I don't think it rallies 500 or 1,000 points and Trump gets in.
No,
It
no,
might have a
no.
couple hundred points in it. The risk return, I still think, in the market here is, the money, the best risk return setup is to bet on Trump. Like, obviously, he doesn't have, that great of chance of getting in, but there's just so much downside, in the market, I think, if he gets in. So, like I said, I think the Dow falls 1,000 points if maybe Trump gets in. Maybe potentially could do that.
In one
And if
day?
Clinton gets
In
in, it
one
might
day?
rally a couple hundred tops. So
Ah,
maybe 200, 300. So you're at least 3 to 1, maybe 4 to 1 they're giving you. And I think it's a lot closer than that. Like, I think it's going to be interesting. So I can't get long this market ahead of the election. Definitely not getting long, or more long ahead of the election. It's just a matter of whether hedging yourself or betting a little bit maybe in your short-term trading portfolio on the short side. And then at
there
least,
you
if your
go.
portfolio drops big time, you'd make a little bit back on some of your trading hedges.
All right, well, I'm going to be calling one of my managers later today and see what he has to say. But for right now, standing pat. All right, Dennis, 808,
Earnings.
809, earnings. Let's just do earnings. Let's cover a lot of stocks
Okay.
here. Get them out of the way.
Hertz. Well, this one, and there are some disasters here. I'm telling you, this Hertz report, it wasn't a good report. I mean, and you wonder how much Uber is eating the lunch of some of these rental cars. It's funny, we've talked about these rental cars in the past, and then they got the big pop up, but they've come right back in here. And you look at
Oh,
Hertz here, it's down 34% here this morning. It closed at $35.74. It's trading at 23 handle. Spencer, what did they say in the Hertz report to knock the stock down almost 35%?
Well, the EPS missed by over $1. Q3 adjusted EPS
Uber.
maybe Q3 adjusted EPS a buck 58 versus 275 estimate. Revenues of 2.5 versus 2.6 billion-dollar estimate. They see the fiscal year EPS at 51 to 88 cents versus a 90-cent estimate. So that's not so bad compared to the EPS from the past quarter, which they missed again by over $1.
How, like, who's are you renting? Like, are people just not running rental cars anymore? Are they doing the Uber? You think the Uber is eating the lunch? Is that the reason
Yeah.
for this?
Oh yeah. It's
So
way
this is not a
it's
short-term like little blip here. Like that's the one thing you got to consider. Was this a bad quarter because Uber was doing something? It might be a longer-term trend. And we said this, for the last year and a half here, and we were wrong a little bit because some of these rental cars, really had a pop. They dropped, and then they've had a pretty good pop here as of late. But I mean, you look at even Avis Budget Group (CAR). That's had a big pop here, and it's going to be down significantly in sympathy here too. I mean, big $40 level there. It has rallied all the way down in April when everybody thought Uber was leading the lunch. It's basically doubled, 21.85 up to 40. But now you start thinking about 50% retracements and stuff. It's like, man, these stocks, those pretty good shorting opportunities on these last pops here in Hertz and Car because today these things are really underwater, and I just don't think Uber's going away.
well,
I looked at this. They did a funky split or something, a spin-off, and so this thing went. I know this was part of the move from 25 to 55, and I was just thinking, is this just a gift horse in the mouth here? Whatever kind of funky split off they did, and probably people have more details than me. And I was thinking it was just it was too good to be true that this thing was rallying up to over $50. I'm just gonna give you one number in hertz, and we're gonna move on here. $22. That's your pre-market low. 2203. Getting a pop off that. That's the only level. I mean, going to the monthlies here. There's no way to calculate 20. Well, no, I guess we went down to 477 here, but $22 underneath that. At least according to these charts with the splits and everything, $20 looks like support as well.
Yeah, it looks like a value trap to me. I'm staying away. Car here, just give us one quick number here because CAR is down 7% here in sympathy. It's had a huge run the last 4 days, giving back over half of that run here. And I look at it and I see a lot of air still below.
Yeah, well, we'll see. Our pre-market low comes in here, and CAR, we're trading right at that $36 level, right on the lows of the session. Going to the dailies here. Boy, there's a lot of trading. Wow, big pop over the last 3 days. A lot of trading at the $32, $33 area. So if you're looking for further, maybe 33 could be support here in Avis Budget. I think it's based in Ann Arbor, too.
Let's continue the disaster stock of the day theme here. And CVS, holy cow, down 15% as well. They are beating, if you're not reporting a good report here, they aren't just, and remember we've been seeing a lot of, this earnings season has been funny because there's been some good reports and they popped and then dropped. But when you're missing, man, they are murdering you. And CVS here is down to the tune of 12 points here right now in their earnings report. Spencer, the details.
Q3 EPS a buck 64 versus a buck 57, so they beat their revenue 44.6 billion versus 45.3. That's a miss. They did lower their fiscal year guidance for 2016. They see their new EPS at $5.77 to $5.83. The prior guidance was $5.81 to $5.89, so a slight cut there. They do see their fiscal year 17 EPS at $5.77 to $5.93. The estimate was $6.53, so big miss on the fiscal year 2017 EPS. They also announced a $15 billion share buyback.
Joel, you got a number for us here?
Well,
This is just 750,000 shares that we traded here this morning. Stock down 12 points. What do you got?
69.69. That's your pre-market low on the first bracket. After the news came out, they kept taking it down. 70 held the last one, so 70 an area, probably a better area to cover a short and then attempt a long. I'm looking at the monthlies, and we traded in the 72s, man. Did a lot of dancing around there back in early 2014. So somehow I think that's going to come into play. Under the $70 psychological level, your low in February of 2014 was 64.95. Dennis, I think I'll go out on a limb. I'll say we don't see that 65 level today. Lunch bet on that or not?
Yeah, I'm not going with you on that one. Questions, and Spencer might be able to answer this too. You buy drugs on Amazon?
What kind of drugs?
What kind of drug?
Like drugs, like pharmaceutical drugs.
No.
Like not like illegal, like like can you buy? Like I'm just wondering, and I'm just thinking, obviously, Amazon's getting into food. Could Amazon eventually be getting into selling drugs too?
I think you're looking at a whole different kind of regulatory
Oh yeah,
atmosphere.
I don't want to touch that with a 10-foot pole.
What's the?
Could you imagine though if they did?
What is the
Just no, not
online?
Could you imagine if they did though?
Isn't there
CVS and Walgreens be in big trouble if
what
the
isn't there an
Amazon's like,
online
you get
drug?
your drugs delivered to you,
Real,
and they know your prescription, just comes right there. And I mean, you can get your drugs delivered to you now, but they're going to be cheaper on Amazon.
what's that online drug retailer? Do they get taken out? Express Scripts or somebody? What's the symbol on that one? Do they get taken
Not
out?
EXPR and those guys?
Uh,
No. That's Express. No. What's?
all
I
right.
can't remember.
I know
We'll
what
we'll
you're,
take a
I know what
break,
you're talking
and
about.
Somebody
then
else.
Yeah. We'll take a break and grab Juan Mendoza and try to remember what the name of that company is called.
okay.
So we'll be right back with Juan Mendoza, CEO, founder of Peep Trade.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Thinkorswim. I'm Spencer Israel, here with Joel Elkanin and Dennis Dick. We're on the line with Juan Mendoza. He is the founder and CEO of a company called Peep Trade. Juan, thank you for joining us, and how's it going this morning?
Thank you for inviting me. Very excited to see how the market reacts to the elections today.
So I want to get to that, but first I just want to ask you a little bit about Peep Trade. I bet you there's some interest from some of our listeners. Explain what exactly Peep Trade is.
Well, PeepTrade is a social network for investors where successful investors upload their portfolio to PeepTrade, and you can see their track record and information like volatility, Sharp ratio, information ratio, and a lot more statistics, so people can see what other investors are doing with their own money instead of just listening what they have to say.
So you can basically, it's a way for you to show your trade. You can show your trades, right? After
Yeah. So it's anyone can upload their portfolio. So it's also a good way to benchmark yourself and see how much volatility you're taking against, the top investors, your Sharp ratio. We give all different types of information to our users, like charts, news, fundamentals. So it's a great way to see how you compare against other investors as well. And if you like someone's portfolio, you can always subscribe, and it's free. You receive notifications every time they trade. Interact with them. So yeah.
What I'm curious as to what you're seeing on the platform in terms of what the top investors are doing. Do you know?
Well, I haven't seen much change. We actually been talking to them via the platform. There's been a lot of
One?
I don't know. They have been pretty stable, so they haven't. I don't see many people hedging or going liquid. They're still holding their securities, so maybe that's an indication of the market stability. Although there's a short volatility, short-term volatility, but everyone in the long run haven't used.
And then last one on Peep Trade. All these trades they're posted in real time.
Well, some of them yes, and some of them not, because we work with every financial institutions and brokers out there. So some of them give us access to real time, and some of them they have like 8 hours delay. So it's not for day traders, but it's something more for buy and hold and swing traders.
Gotcha. So let's talk about this election then. You, what kind of trading opportunities do you see? Maybe with Mexico or anything around this election.
Yeah, I think it would be cool to talk about the Mexican market. As I think many people talk about the U.S. markets. I think Mexico is probably the country outside the U.S. that is more affected by it. So we have a couple of of consequences of how the election goes. For instance, the exchange rate. If let's say we have two scenarios here. If Trump wins, the Mexican exchange rate would be around 21 pesos per dollar, and if Hillary wins, the exchange rate would be around 17.50 to 18 pesos, and that affects like all the industries. The growth as well. We have two scenarios. If Trump wins, we would have a growth of 1.7%, and if Hillary wins, we get an estimation of 2.4. So yeah, there's a lot playing in Mexico for this election. So let me give you a couple of facts. The oil has been, as you know, it's under 50. Mexican unemployment is below 4%. Inflation is pretty stable at 2.9. Growth for 2016, it's forecast to be 2.1. The remittances have grown on 6.6%, and the interest rates are going up. So this brings us a couple of opportunities. I would say there's three sectors that will be more favorable with this condition. The first one is the consumer. As more people, as the remittances grow, there's a low unemployment. The consumer companies we've seen great performances, especially for those companies that are exporting to the U.S., also favored by the exchange rate. Like, I don't know if you know these companies, but Bimbo, which is the owner of a lot of bread companies here in the U.S., Gruma, which is probably the biggest tortilla maker.
What are the
US.
tickers on those?
Sorry?
What are the tickers on those stocks?
It's it's BIMB. That's Bimbo, and Gruma is GRMA.
Okay.
I got one thing for you here. Discussing your site, Peep Trade. You said it's more for your intermediate term traders, not so much day traders. Just when do the people that participate in the site, on the site, do they put the trades out there before they do them, so there's fair execution time, or are the prices posted and the trades posted after they're already in the trade?
Yeah, we only take a look at executions. So every time they trade, depending on the broker, we can have a 20-minute delay. So we post that automatically in the platform after the trade was made. Sometimes 15 minutes, sometimes probably 8 hours. But you always see what time the trade was made. and at what price?
We've been on the line with Juan Mendoza. He's the CEO and founder of Peep Trade. Check out peeptrade.com for check out Juan's site. Thanks a lot. We'll talk to you again soon.
Thank you very much. Thanks a lot.
All right, Dennis, 8:25 here. We got some big earnings to cover here, and they're not all bad. Let's talk about.
No, we've been giving you all the bad stuff, telling you potential, that the market could fall 1,000 points if Trump gets in, showing you the CVS, showing you the Hertz. Well, let's start to bring your spirits back up a little bit. Priceline. Priceline blows it away. New all-time highs here. Stock trading up 60 points in the pre-market. Don't tell us, Joel, that it's trading significantly off the highs. We want to keep it good news here.
Nothing.
Spencer, give us the details on PCLN report.
Q3, adjusted EPS $31.18 versus $29.32. Looking good there. It's a nice 40-cent beat. Sales 3.69 billion versus 3.62 billion dollar estimate. They do see Q4 adjusted EPS at a $12.20 to $12.80 range versus a $13.57 estimate. So that's not great, but the Q3 numbers were great.
Joel, what are you seeing here? What was the high? Tell us the high.
15.
I know it was a lot higher.
The high was hit right on the print here. It dipped down to 1460. 1569.98, so I'll give you two numbers, 1570 and 1600. We did back off that level, 1540. Minor support, and that's about as minor support as you can find in a $1,500 stock.
Well, the old high, 1501, correct? So that's the old all-time high. So if you subscribe to the theory, old resistance, new support. If for whatever reason we continue to pull back here, I think 1500 does become support here now. That's 40 points below. But who knows? Stock's already 25 points off of its highs there. So just giving you some outside levels in case the sell-off does continue here, because it has been selling off for the last few hours here of the pre-market session. So that was your good news. And now let's go back to all the other reports because they're all bad. Valiant, VRX, is trading down 10% in the pre-market. Stock reported earnings there last night. Spencer, what did Valiant have to say?
Yeah, Valiant had to say Q3 EPS $1.55 versus $1.75. Revenues of 2.48 versus 2.49 billion. They did lower their 2016 fiscal year guidance.
Great.
Yeah, and that's the story here, is that they revised the guidance downward.
I mean, when you're selling some of your, premium drugs or whatever to try to just raise cash, that was the most ridiculous rally, just going back to 4 days ago when the stock went from 17 to 24, because they were selling off, something that they'd actually paid more for before, and the market thinks that's good news. That was a gift horse right there, licking the gift horse in the mouth, as you would say, Joel. And 4 days later, the stock is now lower and making new lows here on the move at 1740. And I don't know, there's some people talking the Valiant just might still be in trouble, even despite, maybe having some extra cash from this sale. I just think, there's a lot of debt in this company and there's a lot of problems. I don't like buying problems.
And Dennis, you made a good call with this when it was significantly higher. You said it was either, based on the PE, the price to earnings, they were gonna either the debt that they were gonna fulfill and meet those, or it was gonna go down. And there you said zero and zero or.
I said
100.
when it was $40,
Yeah.
I said this is $100 stock or a zero. I don't think it's in the middle. I don't know if we're still not near at zero, but we're well on our way from 40 to 17 here now, and I'm not buying it because I'm concerned that this could potentially be a zero.
Yeah,
I don't know if that's the case or not here, but that debt is big debt there.
And you talk about the PE ratio, so they're bringing down the earnings and they're bringing down the price. Let's just look at the pre-market action here in VRX and the pre-market low. We've come off that pre-market low here, 1690. That is your pre-market low, getting a little bounce here. The low of the move was 1775, so make that as your battleground. Dennis, just one interesting note here, not to digress too much, but CMG is back up at an interesting level here. We've gotten a rebound and back to that old support. Will it act as new resistance, or will they? Yeah. Little bit of
Interesting you bring that up because my buddy Jamie there, he's probably listening to the show over at Bright. He was saying that yesterday and wondering if there was a trade set up here because for that exact same reason, 385 was huge for so long as support. And then we broke down, we got all the way down to 352. Now we've come back up and kissed up to 386 yesterday. And I think it's a potential trade there. So I'm on board with you and Jamie here. Old support might become new resistance. You're having a setup here. You've come back a little ways. I don't know. I could see a potential setup here from the short side.
Yeah, the only thing that's a little bit, I don't know, worrisome or whatever, you do have a big gap between 388.85 and 403.79. So
Yeah.
maybe lay some shorts out there, 390 if it goes up to 400. Short some more, Dennis.
Yeah, I hate adding to the losers, but I like the 385 level just from that technical standpoint. Then you look here, back to the earnings parade here. We'll just fly through a few other ones. Marriott is disappointing here, MAR. They're trading down 2 points in the pre-market here. We've got DHI trading down 5.5% on a disappointing report. SeaWorld's always down on their reports, but it hasn't traded much stock, so we don't really know. SCAS is down 4% here in the pre-market. So you've had a number of companies here report, and they are all pretty much disappointing. Priceline was the only real star. There was some smaller companies that reported as well, but out of the big ones, a lot of disappointing reports here last night and this morning.
Yeah, that's SeaWorld. Maybe they need like an app or something and go on the internet, but that'd be
Come
pretty
back a
good.
long ways from those lows. Look
It
at SeaWorld,
did.
CEAS.
Wow, battle back. Street kind of leading. Wow, they hit it a little bit yesterday. Actually made a new high for the move. An exact double top here, I believe, at 1462. If you're looking at your charts from October 11th, you got that same price yesterday in Monday's actions. Now trading down your pre-market low. Dennis mentioned too, not a ton of volume. Keep an eye on your pre-market low at 1360. I do see a low just under that at 1353. Below that, spotty support. The only thing is this had a big run. Let's see how much it's going to give back today.
What about DHI? Because that is trading at an interesting level, down on its earnings report here. But if you look, just looking back to the 27th, it got down to 27.78, which was the low of the move. That's right where it's trading here right now in the pre-market, trading at 27.75. Do you think that low can hold, Joel? Are you looking at picking a bottom here on this DHI? Or do you think, this market's just, too heavy here today and, well, a lot of reports are too heavy here today and it's going to take out that low?
Big move for a stock that does trade at some volume here. Pre-market low comes in at 27.50. A little bit of volume traded there, not a lot. A better area to cover short if you have it between 27.5 and 27.75. As far as initiating a long there, you might have to give it a day or two to prove that it wants to hold the 27.50 area.
Well, VRX here, we just talked about it 2 minutes ago. Dr. J just telling us here, just following the point. We just talked about it at 17:30, and it's now at 16:30. Like a minute ago, it just lost another buck. I don't know what was just said. Maybe the conference call's going. Something was said because it just fell another buck.
Yeah.
I don't think it was on my comments that it was going to zero.
Yeah, I don't think so either, Dennis.
Anyways, huge volume here. VRX has already traded this one 2.7 million shares. This is just going to be traded like crazy. 16.35 here now. Everybody who's been trying to buy and pick the bottom on this one is getting hurt here now because there's new lows on the move. Stock was $250 back in in September of 2015. So going back just over a year ago, man, there's been no stock hit harder than Valiant in the last year.
All right,
Poor
Tom.
Bill Ackman.
Yeah, the Ackman trade here. 8:33. We got about a minute or two before we bring in Nick Shaheen, options expert, author, create income with option spreads. Will be interesting to hear what his hedges are for the election. But let's cover one more stock before we go to Nick.
Well, let's look here at AT&T. We haven't talked about it for a couple days. Oppenheimer downgrading the stock here this morning. AT&T trading down just slightly here in the pre-market. It's down about 0.5%. But, since the Time Warner deal's been announced, it's starting to form some type of a bottom, trying to form a bottom.
There you go.
Down here at 36.30. The yield now, the dividend yield on this is 5.35%. This is starting, and I own this in my investment portfolio, but it's starting to look attractive to me too for a number of reasons. First of all, 50% retracement, which we like on the show. 32 to 44 was the move here. So you could call it a 12-point move. Now you've come off a little bit farther than the 50% if you're looking at the 44, because half of that would then be around 38. We're down 36, so we're over through the 50%. But it's starting to form a little bit of a bottom. I think value investors are starting to become interested here. That's why maybe it's starting to, not stop going down. And I don't know, man. I could get on board, longer term AT&T, looking at some potential here for an investment. I don't know about trade, but investment here off this 36.5 level, Joel. What are your thoughts?
You got some support here on the monthly charts going with that. 36.27, 36.30. So looking a little bit of a swing trade. You could cut out there if you're looking longer term. I mean, you got a little bit of protection here, not a ton if it drops, $10, but I don't see that happening. No matter what the outcome is, little downside protection, as I said, with that dividend. All right, 8:35.
I want to bring Nick on live, actually.
You want to bring?
Yeah.
Yeah.
Okay.
Let's bring Nick on live.
Here he comes. Nick Shaheen.
Yes, sir. Yes, sir.
What's going on, buddy?
The usual, a little groggy this morning. Tough night at the gym yesterday, but
Oh, yeah?
I'll get ready for the
What do you
election.
do at the gym when you're at the gym? Are you doing cardio? Are you doing weightlifting? What are you doing there?
I fight.
Oh, he's a fighter. You're not only a fighter in the markets, you're a fighter for real.
Yeah, so I'm walking around with a red nose and a bruised up forehead today.
What kind of fighting? Like, are we boxing or what are you doing?
There's some boxing in there. It's Muay Thai. It's basically Thai boxing, which is kicks and knees and elbows too.
Yeah.
So Nick's prepared then for the Wild West that will happen if a certain outcome happens. If a certain thing happens.
I'm ready for tomorrow.
He's ready if Trump gets in.
Yeah.
Yes,
He's been
I'm ready.
preparing for this.
Yeah.
In his invest portfolio, he's been preparing physically here. You're ready for Trump.
I am ready. I am totally ready for him. And guess what? I said a long time ago, we have a potential blind side that markets are really ignoring. Everybody I talk to is like embarrassed to say they're voting for Trump.
Bingo. Yes.
So like just last night, I was walking around the neighborhood and I came across two friends and we got to talking. Of course, it came up and they were both like whispering when they're saying who they're voting for. I was like, it's like a 4-letter word to say. It's almost as to say like you support the KKK or something. It's really weird. It's just they're like embarrassed, and that's what the media did to us. And I think the biggest loser in this election process is the loss in the faith of the media as being an unbiased reporting mechanism. It is not. It is clearly not. We thought, it was clear that Fox was biased one way. But it wasn't this clear that everybody else was running the other way so blatantly. And I just think that it was not a fair fight from the media's perspective, and it was clear to everybody. Even some friends yesterday that usually we don't talk politics or business or anything in a social setting, they came out and said, "Can you believe how they're treating the head of the campaign versus the other head of the campaign?" It was clear to everybody that it was kind of like an unfair fight setup.
Okay, I want to run with what you were just saying, just a second ago with, the Trump supporters, some of them are scared to publicly say that they're supporters. So when they get behind the curtain here tonight, I wonder if there's not a few more votes for Trump than we think there's going to be, maybe even from the polls here, just because of that fact. And that's what scares me here. Sure, she's got a 3 or 4 point lead in a lot of the polls there, but I don't know how, if they're really, people are admitting as much as if they're going to vote for Trump. And that is the scary wild card here. And now we get a huge rally in the market yesterday, the Clinton rally.
Yeah.
What if, just scenario analysis.
It's not a
here.
rally. It was a relief pop. A relief that something didn't happen over the weekend to put Trump clearly ahead, like another FBI thing. So.
What happens, tomorrow to the markets if Trump somehow pulls this off?
Well, let me say something as to why I think Wall Street is afraid of Trump. Doesn't that put him in a seat with both houses? Then it'll be a disaster for everybody that thinks that they're in the line of fire of any governmental intervention because they can do whatever they want then. I think they're more scared of the Republicans versus Trump himself. They, threw him out that he's the bad boy and we're scared of him. You can't vote for him because he's Trump. I think it's because of the Republican aspect. I'm not a political guy, and I don't know much about politics. But they can control both houses now, and it doesn't look like that's going to change unless I'm wrong, because they don't cover that as much. And if he wins, then you got the Republicans running everything. So they can. I think they're more afraid of Republicans, but they're using Trump as the scapegoat, as the bad guy of why you need to vote for anyone but him. That's what the message has been, because he's so awful. For me, it's very easy. Both either choices are bad, not ideal. Let's just put it, not ideal. So I vote. If I wanted to vote, I pick up um, with safety. I think that our enemies will fear him more than her. Period. That's personal opinion.
I think where he's going to make a lot more enemies too is the problem. Like one thing, one sector, and we've talked, about this before too. Which sectors? We were saying the overall market probably drops pretty hard if Trump gets in, but there's probably some individual sectors that probably do well. Like what about defense stocks? Because he's going to shoot his mouth off and try to cause probably another war somewhere. Do you think defense stocks pop up if Trump gets in tomorrow?
Probably. I mean, these are all. I know one thing: the dollar should go up either one wins. So the trade on this would be to go long the dollar if you're not long already.
Why do you think that?
Because he will kick Yellen out, and he was upset with her how she didn't raise rates. But if he wins, then the threat of danger coming up Yellen would have no excuses not to raise rates, because she will probably use Trump. Market falls. Oh my God, we need to delay one more month.
Oh yeah. Well, if the market, and do you think the market falls tomorrow if Trump gets in? Like I was saying,
you bet.
I think we could fall. Like maybe I'm exaggerating at 1,000 Dow points, but
I think
500 point drop in the Dow is very possible here if Trump gets in at least.
I think we can party like it's 1999. SPX.
So how are you positioning yourself ahead of this election? Because you're saying too that there could be an outside chance that Trump could get in here. How are you positioned right now going into this election tonight?
I've been trading short term. I've been selling the contrarian calls. So if I see them running, I'll sell the calls, credit call spreads. And when I see them falling, I've been selling credit put spreads with conviction, because I know we had support until Friday. Friday kind of scared me because I know we had support, but the markets were not acting logically for fear of an over the weekend headline. So I didn't step too heavily with the credit put spread. So I'm sitting on a lot of profitable credit put spreads. I will probably book most of them here. I'm sitting on a few credit call spreads. I'll probably close them or move them up or buy some calls. And then right at the last minute or throughout the day, I may buy a lottery ticket one way or another. I just haven't decided which way the markets or which way the country is going to vote. You guys said it. I mean, the margin of error is the difference.
Yeah.
Pretty much. I mean, you saw what happened with Brexit, and we have this. This is an emotional vote. Trump's message was very emotional, and it touches, believe it or not, what we see on TV is not America. America is anything in between the two coasts, and there's a lot of people there. How many people did he touch? I don't know. So it's just a lot of givens that I don't think are correct, and the markets will express themselves tomorrow.
We're on the line with Nick Shaheen. He's an options expert, author of Create Income with Option Spreads. Nick, let's just kind of take, politics out of the matter. Well, if you're looking to hedge your portfolio, let's say you had $100,000 in the market. You've been in the market for a long time. You're 100% invested right now. Going into this election on this hypothetical portfolio here, are you raising a little bit of cash? You're buying some SDS? You're looking at some expensive options? Or sitting on hands?
I would. I don't like to sit on hands when I'm worried about my asset. It's like seeing a fire and looking outside and saying, man, it's too far out. I have time to lay down some ground cover or something. What's wrong with spending a couple of bucks to protect $100,000? Nothing is wrong with that. I'm of the opinion that I would need to protect overnight at least, because we don't know if it's going to be overnight. What if it's a dragged out fight where they demand recounts and all of that? So you have to buy protection, even though protection was so cheap for so long and people should have bought it already. But now they're running for grabbing for it now. I mean, even yesterday, you would expect the VIX would be clobbered back down to the lows, but it wasn't. It's still pretty high comparatively for this year. I mean, this year the VIX has been beaten up every time they get, but not anymore. I have a sentence that I say, I see buy. I've said it here, I think last week. Buyer exhaustion is there, even though when we were at the highs and when we dropped a little bit, but the markets is still dangerously bullish. Yesterday was a perfect example. But the oomph of the bull has been, emasculated somewhat. So I would buy protection. I mean, why would you gamble with your money if you're worried? It's a coin flip, people. Would you gamble your money on a coin flip? I wouldn't. I would buy protection. It's not that expensive.
Nick, let's talk, just on some other tells here in the market. I'm always looking for tells. And this earnings season, we've had some pretty good reports, but on some of these pretty good reports, we've seen stocks pop and then drop and give it back. And the stocks that are missing, they are annihilating them. Like, I mean, today, just for instance, we're looking at CVS on their missed report, trading down in the pre-market here over 15%. We're looking at Hertz on their missed report, trading down now 38%. Valiant, which always seems to disappoint. It's down 20% here now. We talked about on the show right before you got on at 17.30. It's now 15.27 here. Like, this market, there are some nervous people in some different stocks here right now. Like, aside from Valiant, which, might be, a disaster. It's the disaster story. I mean, you look at CVS, which was a loved company. Just, in the summer it was loved, trading up near $100. And now it's hated. It's down here at $70. They're selling it with two hands here right now. There's people that are nervous in this market.
They are. We've been so high for so long under false pretense. By that I mean it's not like we don't deserve to be up here, but we had a lot of help getting up here, and that help is leaving here in the U.S. And and overseas it's not. It's still, but it's not working. Kind of the QE there. So there's a lot of uncertainty. I'm not here to toot the get out of Dodge horn, but I'm cautious if I'm managing a big pile of money. If I'm selling spreads, I want to stay out a little bit in time, not necessarily like I recommended all of my people to get out of the weeklies for this week, even though I posted them and it was still perfect, the Iron Condors. But I said I wouldn't trade them because this week is too violent and not based headlines. Override any homework we do. You and I could spend hours doing homework and we're correct based on the homework we've done, and then a headline comes out, boom, trade is done. All the homework means nothing. So yes, they're punishing some of the stocks, and some of the other stocks are getting punished just as a sideline or a collateral damage. But like Google, when it started popping last week, I shorted it with a credit call spread at 837.5, I think, or 835. So that was an easy trade. I collected 40 cents on a $2.50 wide spread, and I didn't worry about it too much. I closed it yesterday for 8 cents, I think, to get out of it. So sniping trades like this lets me sleep. That's why I preach credit spreads, because then you can sleep at night knowing that if the market goes to zero, like you said, or 1,000 points, I know my maximum damage on both sides. And if it's a balanced, then it's not a disaster. But somebody that's completely biased one way, that doesn't protect themselves, if you're short or if you're long, and then the decision goes out against you, then you suffer a lot of losses just based on one headline, the elections.
Nick, what about Priceline here? Did you get down and dirty in that, or just too
No.
much other? No.
No, I mean, add a VIX of 20 or 21 or whatever it was to earnings, price lines, volatility, and really you couldn't buy a lottery ticket on it. Even if you wanted to, it was too expensive. So I can post a chart, and just, you guys talked about the ranges, and I think, if you look at the chart I posted, I don't know if your listeners can see it. There's a mean reversion line, like red and blue, and you can see it's just above the blue now. So being below the red and it coming back to the blue line, like, reverts the mean. So it's trading a nice uptrend. The numbers it produces are huge, but it trades like a micro cap. It's tightly controlled. So it is. I would probably sell some credit call spreads in it if I knew that the markets in general were going to be somewhat range bound. the rest of the year. So I might snipe that after tomorrow. But for now, I did not play it. It was too expensive for a lottery ticket, and I didn't have conviction on a coin flip like the earnings.
Nick, one other stock popped up in the chat here. I think it was TXT. I think that was a while back. I think that's like Textron here. I'm not exactly sure. Could you just pull that up on your computer there and see if you got any opinions on TXT?
Yeah, same comment as far as reversion to the mean thing. It had a big day yesterday that kind of, like Priceline, almost identical move relative to the recent uptrend. I'm going to throw it in there for you. I didn't draw any lines on it, but the red and blue lines is just a simple regression line, and it's just coming back, and it may. It is at an important level here because this level had served as support before and broken, and then resistance several times since in 2016, since April, I should say. 1, 2, 3, 4, and here it is again at it. So if they get higher lows is good. So they're gaining some steam trying to break the roof. And if they do break the roof, they overshoot and maybe 42, 42 and a half, which is also another level that's contestable, highly contested in the past, in 2015 for them. So it is at an important level. It has a nice trend going for it to see if they can break through that roof of 40.75 to 41.24-ish.
We got a smaller price stock, real quick. Moving on volume here. MT. It looks. I'm not even gonna try and pronounce the name. It had a strong day
Steel
yesterday.
stock.
Yeah, steel stock here.
ArcelorMittal, yeah.
Yeah. Oh, nice pronunciation there. Any thoughts on that one? Moving on volume
Yeah.
today.
Yes. First of all, I don't know how affected they are with the dollar, so I would be careful with that. And technically it's pretty nice looking because we were talking about knocking on a roof. I'm going to throw a chart in there. This area where it is right now is a long-term. I'm not a technical analyst. I play one on TV, so I don't draw perfect lines, but the spirit of something bullish happening here. So if they can blow through that yellow line I just posted, which is coincides with about 6.9 to 7, they have some pretty nice upside from there. So it technically poised to do well. I don't know about
The
earnings or
problem
anything
is
like.
today it's trading down 10%, so it's down at 635, going the opposite way on
Okay.
8.6 million. So it's getting hit here today, but
So that setup is gone for now. So they'll have to regroup. As long as they don't lose the higher lows trend that started from February, I think, they still have a chance to get at it. But this, for now, looks like to be a roof. So
All right.
I don't follow it fundamentally, but I know it had issues a while back. So I don't know if they've solved those or not.
Pre-market low 630. Looking on the dailies here, I see a
Oof.
couple lows just below that at 627. Your double bottom. That'll be a good level to keep an eye on. Well, Nick, it was great talking to you this Tuesday here. Nick Shaheen, author of Create Income with Option Spreads. Get some popcorn, watch the TV, and be real interesting to talk to you next week.
Can't wait for it, guys. Thanks.
8:53, Dennis. We've done some
okay, this Valiant thing is insane. It's now down at 4. So we were just talking about it. If you go rewind the tape to 20 minutes ago, it was 17.30, and now it is 14.30. So it's fallen another dollar here. This headline, this is the conference call going on right now.
So they're on the call. They're on the call right now. Although he did say
he should hang up.
He did say that.
Stop talking.
Jesus. No. He said they're going to try to keep it short to give people the chance to vote. But the call has been going on now since about 8:30.
I've got a comment coming out. Somebody was just saying that the comment that came from the call is that Valiant is confident in the forecast, but there may be more surprises. Did they say that? That is crazy if they just said that. That's what somebody was just telling me. They said there may be more surprises coming from the company. What does that mean? What do you mean more surprises? If that's like a comment coming from the conference call, they need to find better wording there because I don't like that thing, more surprises. So I'm not sure if that's why it was getting hit here or not, but somebody just said that was being reported, that they said there may be more surprises. Is that not insane to say on a conference call?
Oh man, not good.
We will dig our way out of
Maybe
part
not
of the.
that's true. I'm not. This is not verified here,
No, no,
but
no, no,
somebody was
no,
just
no,
telling me
no.
that that was said on the conference call.
I'm just going through Twitter right now. Here's one. We will dig our way out of part of the growth hole.
Part.
Part.
Okay. All
This
right.
is just a mess. This Valiant is just a mess. I mean, it was a $250 stock. I'm going to tell you, I've said this on the show before, not even talking about Valiant. When a stock falls 90%, there's a stat out there, and I still never get the stat exactly, or I never say it right. But when a stock falls 90% from its highs, if you look at that stock 10 years later, 90% of the time, it is still down at least 90%. So basically saying 90% of the time, a stock that falls 90% doesn't come back. So here's the stock, $250 a share, now down to 14. This is obviously down way more than 90% here now from the highs. So, maybe this is one of the 10% times that it's going to eventually come back here, but this keeps looking more and more like this might be a zero. And that's why I'm completely hands off here on Valiant. I said it just at 17:30, 20 minutes ago, and now it's 14:30. I don't know, obviously stocks don't go straight to zero. Stuff happens here, but there's just so much uncertainty here right now. This conference call, whatever comments are coming from it right now, are not helping the stock at all. They're saying stuff like surprises and stuff. I don't want any part of this. So I'm completely hands off on this. It's now 13.95. This company is a mess.
Dennis, imbalances, they have any bearing today? Did anyone's popping out at you? 1380.
I haven't even looked here because we've been talking election, we're talking so many other things. So opening up my imbalance screen here now. Let's see what we're looking at here. Yeah, there's a few. Bank America, 629,000 to sell. That's a big sell imbalance. Actually, Bank America did get downgraded here this morning at Deutsche Bank, so that might be putting a little bit of pressure on it. The financials are under pressure here, though. Citigroup, 151,000 to sell here. Wells Fargo, 102,000 to sell. I heard a Wells Fargo commercial yesterday, where they're trying to, get back get back their customers there. They're really putting, commercials out there to get their brand back, but obviously, that's been hurt and tarnished a little bit with the fake account scandal. Also looking here, Square, we don't talk about that one a lot. SQ, 58,000 to sell in SQ. Twitter, 75,000 to sell. So they're mostly sell imbalances. Most of them are smaller. I see a little bit larger sell imbalances in the financials.
All right, we've covered a lot of different things here on the show, a lot of different sectors, the markets, the crude. Dennis, we got just like another minute here. Any final comments here before the big day?
Oh, I think I'm just taking Nick's advice here. I think I might look at, some cheap protection in whatever way, whether that be options or whether that be hedging my portfolio a little bit, maybe by selling, some SPY against it. But I think I'm going to look at this because I think the market is not pricing in enough of the possibility that Trump could get in. So I don't think he's getting in. I think Hillary's probably going to win, but I think the downside, the risk return right here, um, it looks attractive from the short side here because we've already had the Clinton rally. I think we could rally a little bit more if she gets in. But I think if for whatever reason Trump does get in, I think the market gets killed. So I want to be protected a little bit more. And that's what I'll be looking to do today.
And I think that if you do take on some protection here and you do get a pop, I don't think it's going to be one of these runaway pops. I think you'll be
No.
able. I think you may take some initial pain and then it will come back to you. Whereas I think if you go all in long here and you think things are just going to keep going up and up and up and we're going to be up a lot tomorrow, to me that's the real risky proposition. All right, it's 8:58, Dennis. We're going to let you go, and Spencer is going to bring on another special guest here and been talking with Sean Udall of Quantum Trading Strategies, and he has some stocks that he thinks are going to be good buys no matter who's in the White House. Good buys or good sells. Spencer, you want to preview the show, and then we'll grab Sean, preview tomorrow's show?
Yeah, sure. So looking at tomorrow's show, we've got a pretty good guest, actually. This guy, Aaron Boski. He is a expert. So he's been living in Shanghai for about 10 years now. He's an expert on the Chinese market. He runs a hedge fund out there, and so he's a really good macro guy. He'll be able to explain to us like the macro situation of what's actually going on in China because he's been there. He works there and he lives there and he understands that market. So we're very much looking forward to. I was telling him about January, February. The comments on our show how we were saying how we don't really know what's going on in China. Well, here's a guy who could explain to us what is going on in China. So we'll do that tomorrow, but let's go take a quick break, our last break of the day, and we'll go grab Sean Udall.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Alcanan, along with Spencer Israel, and we have a special guest on the line, Sean Udall, CIO of Quantum Trading Strategies. Sean, how you doing on this election Tuesday?
I'm good, and I'm really, really happy this is going to be over pretty soon.
All right, so we've been talking a lot about good buys and good sells, and you're saying that you have some stocks that maybe, I'm not going to put you on the spot here, but may be election proof. So let's go with 4 stocks on the long side and maybe 3 or 4 on the short side, because I know you always look both ways in these markets. So let's start out on the long side.
Sure. So I mean, well, the first thing I'll say is, if you guys remember, you had me on the show months ago, and everybody was super, super negative. This was like February, March, and when the S&P was 1,800, everybody was calling for 1,450 to 1,600, and I said 2,350 to 2,450 on the S&P 500, and I'm standing by the call, and I think we got a tremendous opportunity last week. I kind of don't like the huge rally yesterday, but it is what it is. So the first thing I'm going to start with would really be the biotech space, because in literally to the hour, I wrote a note to my subscribers on, it was either Wednesday evening or Thursday evening. And I just said, basically it was titled Extreme Opportunity in Biotech. So the first 3 or 4 I'll just talk about would be ACAD, which is popping this morning. That's ACAD. Now, this was a clinical stage company. They actually do have an approved drug. The big thing about them is that the drug that currently has a small approval right now for a limited use is going to go up for this thing called Alzheimer's disease. So you can just imagine, and there's no real good treatments for Alzheimer's right now. So if they get approval for Alzheimer's, the stock was 20 a couple days ago. It's about 25 right now. It's popping today. But I literally have no idea how much upside you have if they get approval for Alzheimer's. My guess is somebody probably buys them before that happens. Another 2 in that same space would be something like a CEMP, CEMP, which just got hammered. Again, I think they're probably going to get approval for the drug that they have right now. This is a great case, by the way. You never want to buy a good chart in biotech. It was a good chart when they were at like 24. The stock's at 680 to 7. And again, I think they're going to get an approval. I don't know if the stock goes back to 25, 30, but probably goes back to the mid to high teens. And then two other ones would be something I think you could almost pick any beaten up software company. So like I had really, really good success earlier this year buying names like Marketo, which got bought out, and Demandware, which got bought out, and other names, and Splunk, which doubled without getting bought out. I think there's a similar opportunity. I'll just throw two out there, Benefit Focus and Twilio. So Twilio is a recent IPO. Benefit Focus is a company that's been around a long time. And I looked at their report a couple times. I don't see that Benefit Focus missed the quarter, and their stock has gone from like 48 to 28. And this has just sort of been a big risk-off, de-risking, fear-based sort of sell-off the last 10, 11,
What's
14
the symbol
days.
on that one, Sean? What's the symbol on that one?
BNFT. BNFT.
Okay.
So, and again, this is sort of, it's not, they're new enough that you can't call them old school. They still have pretty good growth, but they're also not, a brand new IPO being victimized by the fear of an IPO lockup expiry or something. So but this just shows you the magnitude. Another stock that had traded really stably and really nice for basically 8 months is Zen, Z-E-N. I mean, that I want to say, now they had a huge day yesterday. I think they were up about 10%. But I mean, I'll just throw out those two software companies. You could basically look at 30 software names, and probably 25 of them are good buys right now. The 5 you don't want to buy, by the way, are the 5 that have yet to fall. So, that's the one thing in a market like this a lot of people do is they literally buy the strongest chart in a market that a ton of stuff has gotten killed, and that's the stupidest thing to do, because if there's 5 strong charts left, those will be the 5 stocks to be attacked next.
What about a
but
few
anyway,
shorts?
those are
some
shorts? Pretty good longs. If you want some, what?
Few shorts here. A few shorts.
Yeah, I was just going to move on. If you want some shorts, I kind of like the stuff that everybody, loves, or I like to short the stuff everybody loves. So, I actually think Facebook is a pretty good short. I even said so before they reported. In fact, my thesis on Facebook was very simple. It was very much like the Apple thesis in 2012, that once you get everybody loves it, everybody thinks they can do no wrong, everybody knows they're going to have a good report. Well, guess what? Everybody's in the stock. They bought the stock. There's no incremental buyers. And by the way, that's an exceedingly expensive stock. The difference between Apple in 2012 and Facebook now is Apple wasn't overvalued in 2012. It kind of was for them, but it wasn't relative to the world or the market or lots of other things. Facebook is massively overvalued. People just don't realize it yet. So Facebook, Netflix, Amazon, and that kind of stuff. Basically, just pretty much whatever the stuff that's the most loved that has yet to kind of take a big hit. You're almost. I mean, here's what you don't want to short: Chipotle. Guess why? Because the shorts have already made a bunch of money in it. So and actually that thing could be starting to inflect higher in a quarter or two. But yeah, my favorite shorts would probably be the FANG, basically, except FANG less Google. So Facebook, Netflix, Amazon. I think you can basically short any of those, especially into strength. I'm trying to think. There was one other one I identified the other day. It was something in Zen's group. Now, darn it, I can't remember the stock off the top of my head. But it was one of these software stocks. It was like in Zen's and Benefit Focus's group. I can't find it right now. I'm sorry. But anyway, so something that's basically riding 52-week highs that's yet to report earnings is probably pretty vulnerable. Maybe a good target to go after with puts.
All right, Sean, we'll keep an eye on all these issues and see how things change tomorrow. If we get a chance, we might dial you up again. Sean Udall, CIO of Quantum Trading Strategies, giving us a whole bunch of stocks to look at, long and short, ahead of the election. Thanks a lot, Sean.
Take care, guys.
We'll talk to you again soon. All right, Spencer, 9:08, extra 8 minutes there for some stocks for our listeners to take a look at. Have a great trading day, investing day. Get out there and vote, and we'll be back tomorrow morning.
Go vote.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.